When it comes to business and trading, knowing the differences between terms can make a major difference. So, what's the difference between revenue and profit? Revenue is the total amount of income generated by the sale of goods or services related to the company's primary operations. Profit is the amount of income that remains after accounting for all expenses, debts, additional income streams, and operating costs. Revenue is the income a company generates before any expenses are subtracted. Imagine a clothing retailer makes money from selling its clothes before accounting for any expenses. That is its revenue. In addition, companies often report gross revenue and/or net revenue. Gross revenue is all of the sales a company makes prior to any returns or pricing discounts. Once these residual sale items are accounted for, the company then reports net sales or net revenue. Bear in mind that net revenue does not include company expenses. It only reports the aggregated revenue factoring in certain aspects of revenue that may reduce the amount. What impacts revenue? There are many factors that may impact the revenue a company is able to bring in as part of its operations. If a company's products or services are in high demand, it can lead to an increase in revenue. Conversely, if there is a decrease in demand, it can lead to a decrease in revenue. Companies must be sensitive to what they charge, as pricing is a crucial factor in determining a company's revenue. If a company sets its prices too high, it can also lead to a decrease in demand. A company may earn less revenue based on external competition. Competition can impact a company's revenue by affecting its market share. If a company faces intense competition, it may have to lower its prices or risk missing out of certain customers altogether. Gross profit is revenue minus the cost of goods sold, which are the direct costs attributable to the production of the goods sold in a company. This amount includes the cost of the materials used in creating a company's products, along with the direct labor costs used to produce them. Meanwhile, operating profit is gross profit minus all other fixed and variable expenses associated with operating the business, such as rent, utilities, and payroll. What impacts profit? Since profit is a component of revenue, all of the impacts to revenue also impact profit. However, profit is impacted by more factors, as there are more items involved in the calculation. For starters, companies may have escalating costs for COGS or other direct costs associated with producing or purchasing the products it sells. On the other hand, should the company be able to manufacture goods more efficiently, this may increase profit without impacting revenue. Companies are also usually mindful of operating expenses, and these costs are the expenses that a company incurs to run its business. If a company can reduce its operating expenses, it can increase its profits without having to sell any additional goods. Is revenue the same as sales? Revenue is commonly referred to as sales, but revenue is any income a company generates before expenses are subtracted, while sales are what the firm earns from selling goods and services to its customers. What is more important, profit or revenue? While both are important, profit gives a more accurate picture of a company's financial position. That's because a company's liabilities and other expenses such as payroll are already accounted for when its profit is calculated. How much of revenue is profit? Profit is whatever remains from the revenue after a company accounts for expenses, debts, additional income, and operating costs. Revenue and profit are two very important figures that show up on a company's income statement. While revenue is called the top line, a company's profit is referred to as the bottom line. Investors should remember that while these two figures are very important to look at when making their investment decisions, revenue is the income a firm makes without taking expenses into account. But when determining its profit, you account for all the expenses a company has, including wages, debts, taxes, and other expenses. If this video helped you, smash that like button. Subscribe for more videos just like this, and check the description for assets and resources to start your trading journey.